You're watching Stock Watch this week. I'm Zinati Guma, and joining me to unpack your stock-related questions today via Zoom are Nader from Benguela Global Fund Managers and Ricus from PSG Hole-in-One Ruimsig. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents. The last day of this short week, I do feel like we shouldn't be at work, but hey, capitalism says we must be at work today. So much happening, actually, especially in the US. We have the jobs data coming out. Grant, just starting off with you, what are you looking at the moment in terms of the, what's stimulating the market?
First thing I'm looking at is how am I going to get through a 5-day work week next week?
I hear you.
We've been spoiled. No, so I think I'm actually looking for signs of this perceived slowdown. So we know consumer confidence and business confidence in the US has fallen dramatically in the past couple of months. We know it's the trade wars, etc. We all know about that. But the hard data, so the actual numbers that are coming out, the jobs, the durable goods orders, and a number of those points are still strong. So the question is, how much of that is front loading and how much is actually where they're getting ahead of tariffs and they're ordering everything while it's still open, and how much is an economy that's actually holding up? So are people saying one thing and doing another, or are they saying one thing and then what they're doing is going to follow what they're saying? So in other words, is the economy going to start softening? They're going to start spending less? So I'm looking for those kind of signs. It's going to come through when you start to see job numbers start to increase a bit more than expected, when you start seeing sales dropping more than expected in terms of consumer retail sales. Those are the things I'm looking for, and I think that's going to come. Thus far, it hasn't really, but those are the signs that this economy is going to start slowing down more significantly. I know the GDP number was already negative or recently, but that is for obvious reasons, because a lot of that has to do with this surge in imports to get ahead of tariffs. So I want to see some of the hard data rolling over to support these concerns.
Well, as we're talking about tariffs, China has finally said that it is ready to come to the negotiating table. I do understand that it is early days, Ricus, but is there something to be held on to there, some optimism?
Yeah, I don't think it's unexpected, because the tariffs as is are unsustainable. One never knows with Trump. I mean, he might just ignore it, but a reasonable person would say no. You can't have this kind of, well, it's not really trade tariffs versus China, it's just a trade embargo. So there will be some adjustment to that going forward, but that doesn't decrease the effect that tariffs will have on the US economy. And Grant was spot on. The hard data thus far looks okay, but it's going forward that's going to matter. I think one thing one has to concentrate on is taking a look at what happens with credit in the US, because all these importers will need cash to adjust for this uncertainty, to pay for tariffs, and if we have a slowdown in the economy, banks are not going to lend as willingly, and that becomes a snowball which can really put the American economy, and by default the world economy, on the back foot. So the current trade talks, it was expected. What's going to happen as far as what they are going to be set at, who knows? But I think in general, as I started off this point, tariffs are bad for economic growth. Doesn't matter how you look at it.
Yeah. All right. Well, let's get into the questions that have been sent. First question goes, is there value in Anglo-American post-demerger, Grant?
Yeah, I like what's left. Once they get rid of Amplats, they're selling out of their coal business, so they're going to have a lot of cash. They've been paying down a massive amount of their debt. They're holding on to really just iron ore and copper, and good assets. Copper is probably the best metal right now for, it's used in new technology, phones and data centers, plus old technology, cabling and property and electrics, etc. So It really is a metal for all seasons. I definitely think you want that copper exposure. It's going to be, I think it's around 60% of Anglo's earnings and iron ore the balance. So you've got a really nice pure play there, better than Billiton, in fact, in terms of commodity mix. And so I like Anglo's if you want to be in diversified miners, if you want to be in that space. Anglo's, I think, is a decent prospect.
And I'm also just wondering, looking at the value that Grant is talking about post demerger, if then it could be even more attractive, Ricus, for a takeover bid.
Taking the words out of my mouth, I think that is a distinct possibility. Post demerger, considering what Grant said, it's very attractive copper assets. I think copper miners are in play at the moment. And certainly taking a look at the future demand for copper and also the scarcity of current production and the demand for it. I mean, Chinese warehouse stocks, I saw an analyst predicting that Chinese, copper sitting in Chinese warehouses at the current rate of of those stocks decreasing, they'll be sitting at zero in about mid-June. So yes, to answer your question and to agree with you, I think Anglo has a high probability of being approached, whether in a friendly or an unfriendly manner, as a takeover target.
Yeah. What about Anglo-American Platinum post demerger? Would you be looking at that when it's separated from the parent, Grant?
Rule, these spin-offs tend to do well because you now have a management team in charge of their own destiny and managing their own balance sheet completely autonomously. They're not having dividends funneled out to the head office to sort out those capex plans that they've got. So aside from the view on PGM as a whole, I think Amplats will improve from here as a business. The separate view is whether you want to own PGM to begin with. I think it's probably reasonably attractive at these levels given the supply demand and the cost curve, etc. But not an incredible 5-10 year outlook in PGMs, as we all know. But of the selection of them, I quite like where Amplats will be sitting.
What would you be using right now, Ricus, to kind of assess the investment case for Amplats?
Yeah, Grant said something I didn't think about. He's quite correct. If you've got a focused management team, and once they get used to their new name, there's that potential for operational improvement without the hangover of a lot of bureaucracy coming from head office or from the previous head office. But at the moment, I think whether it's Anglo-American Platinum or Impala or any of the other platinum miners, it's really dependent on what's going to happen with PGM prices going forward. I think the outlook for PGMs are probably a little bit more rosier than it was over the past year or so. And in that case, if PGMs start increasing, I would be taking and I wanted holding in any of the miners, I would be taking a look at those with whose gearing is more advantageous to an increase in the prices of the metal they sold, but with good balance sheets. So something like Impala, for example.
Viewers, please do keep sending your questions coming via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. We'll get to them right after this when we get them back.